In this video, I'm going to explain what a channel down pattern is in the stock market. On my screen here is a stock chart, and this is for Colgate Palmolive. And you can see here that I drew some red lines that kind of encase these price bars. And so this upper red line, you can see it's almost like a ceiling for the price activity. Like each time the price comes back up to this red line, it's like it bounces off it. And this bottom red line, it's the same thing. It acts, it acts like a floor. And so each time the price comes down to this lower red line, it seems to bounce off it. And so you can see there, it's like a channel, and it's sloped downward. And each of the red lines has the same slope, like they're both going at the same angle. And that's the idea behind a channel down pattern, is that it's in a channel and it's downward sloping, and there's kind of it's a range really, and there's an upper level and a lower level. So the lower level, it's like support almost, where when the price gets to that level, there's enough buyers to cause the price to reverse and go back upward. And the upper level is like a resistance level, where if the price gets to there, then it turns around and reverses and goes downward. So how can you benefit from this knowledge? How can you profit from this in the stock market? Well, there are a couple ways to consider. The first is, and probably the one that might make the most sense for a downward channel pattern, is to short the stock or buy put options anytime the stock gets to the top of the range here. So once it gets to the top of the channel, say right around here, that might offer a good opportunity to short. Because if this upper part of the channel does end up serving as some sort of resistance, then that might be an opportunity to short in anticipation that the price may not break that level of resistance to the upside, and therefore it might go back down to the lower part of the channel on the downside. And so if you were, say, to short right here, then you could capture the movement of the price going down, and potentially maybe you set a stop loss up here. Of course, by the in real life, if the price activity were doing this, you wouldn't necessarily know this was a channel yet. And so down here, by this point, maybe you're starting to see signs that this is a downward channel, and so potentially you could short right here. And this trade right here might have worked out quite well. As far as when do you close the trade, if it's going in your direction, you could set an order to close it near the bottom of the channel. So if you were to have shorted right here, the price goes down, you could set a buy order to close the position when it gets toward the bottom of the channel. Someone might also potentially consider buying stock or buying call options when the price gets to the bottom of the channel. And so the idea is, again, if it's a support level down here, you could buy when the price gets to the bottom in anticipation that the support level won't be broken, that the price won't go below it, and that it will stay within the channel, in which case it might go back up. And so this right here is a good demonstration of that. This might have been an opportunity to buy, and you can see the price ended up going back up toward the top of the channel there. Now it's a little bit less promising of a potential trade to buy at the bottom of a channel down pattern, because the channel is going downward. And so let's say, for example, that you bought right here near the bottom of this channel in anticipation of it going up and getting to the top of the channel. Well, since the channel is going downward, if you set a profit target near the top of the channel, each day the channel is going down. And so each day your profit target is getting lower and lower. And so here, this did make an upward move. This is something, this is a potential profit to have been made right here, but it's different than the potential profit. So let's just quantify this here. This is, if you look over here at the price where I am, the price here is 77, and it got up to 78.5. So that's kind of a $1.50 move there from the bottom, near the bottom of the channel, to near the top of the channel. Now let's compare that to here. So near the top of the channel is 79.50, let's say. And if you held on to this down near the bottom, this is 77. So that's, taking this trade from a shorting position to the bottom of the channel, there's just a bigger chunk there. That's a $2.50 move compared to holding from the bottom here to the top of the channel as it's going down. That's only ends up being a $1.50 move. There's trade-offs, of course. It's a shorter distance for it to go, and so maybe that improves your odds to some degree of reaching the profit target. But those are some ideas for how you could trade a channel down setup. Now, does it actually work? Can you actually make money doing this? Does it have a track record of success, this particular trade setup? That's what we do at Stock Market Guides. We bring historical data and give you access to it. So we would say, look at Colgate Palmolive and say, okay, how many times historically has it had a channel down setup? And of those times, how has it performed? How many times did it win? How many times did it lose? And so we basically take each given trade setup, look historically at that stock, and tell you, here's how it performed historically. And that way you can make an educated decision about whether to consider taking a trade for it or not. If you have any questions about channel down patterns or just about the market in general, you can contact us anytime. Our email address is support@stockmarketguides.com.